on and talk about an earnings candidate, IMFA, that's reported its Q3 numbers. We're joined by Subhrakant Panda, MD of IMFA, who's joined us. Hello, Mr. Panda. Thank you so much for joining us today. Mr. Panda, firstly, given the improved realizations in Q3, how sustainable do you believe the current ferrochrome pricing is, and what demand indicators would be key triggers to further margin upside?
So we consider the ferrochrome realization numbers we are seeing at present to be sustainable over the near term. In Q3 FY26, we saw a noticeable increase in ferrochrome realizations as compared to the immediate preceding quarter. And that was on account of certain market dynamics, which is a sharp cutback in ferrochrome production, especially in South Africa. As a result of which, there was support to prices, and also on account of the fact that chrome ore prices and other cost pressures are there on non-integrated producers, which is lending support. So while in the ongoing Q4, we temporarily saw a slight dip in prices, but realizations are back in the roughly 118,000 to 120,000 rupees a ton in the domestic market, and at about 97 cents or thereabouts as far as the Chinese market is concerned. Going ahead, we do expect, as I said, these realizations to hold, because stainless steel growth is there, even though it is slightly tepid, but growth is there. And more importantly, ferrochrome production is under pressure. And even though South Africa has announced certain electricity tariff concessions, we at this point in time are waiting to see how it plays out as to whether it is sustainable over the medium to long term, because there are lots of conditionalities attached to that.
Right. Mr. Panda, also, as you plan to increase the exposure to the domestic market with additional capacity coming online, how do you see the domestic export sales mix evolving over the next 2 to 3 years?
So as far as our existing capacity is concerned, we produce around 260,000 tons per year. As far as FY26 is concerned, I think that number will be about 265,000 tons or so. And that is going to go up significantly with our greenfield project, which we are putting up in Kalinagar, as well as the strategic acquisition, which we have finalized. And the indication that we've given in terms of output is around 400,000 tons of ferrochrome in FY27, going up to between 475 to close to 500,000 tons for FY28. As far as the greenfield project is concerned, it is on track, and we expect to light up the first furnace in June 2026, and the second furnace to be commissioned shortly thereafter. And as far as the strategic acquisition is concerned, we are in the process of obtaining necessary statutory approvals and certain other clearances. And we are on track to close the deal in Q4 2026, that is the ongoing quarter. In fact, we should be able to take the unit under our control in the month of February itself. But, it'll, as I said, dependent upon the final few approvals, etc.
Right. Finally, Mr. Panda, with the 1 lakh TPA greenfield expansion at Kalinagar expected to be commissioned by June 2026, how should we think about the incremental contribution to volumes, revenues, and even the margins in FY27?
We do, as I said, expect the plants to be operational on time. Now, in terms of the impact that it will have in terms of our costing, Kalinganagar is logistically more friendlier, as it is located closer to our captive mines, as well as to domestic consumers, and for exports, Paradip port is next door. So we expect, close to about 2,000 rupees a ton reduction in our blended average EBITDA cost. That is once we, get over the first quarter, where there will be, sort of startup related costs and all of that. But when we have the benefit of stable operations, we expect about 2,000 rupee per ton reduction in EBITDA cost overall. And the other point which you are asking is about our sales mix. So presently we are about 95% exports. And clearly, we see both an opportunity as well as a sort of a sense of responsibility to cater properly to the domestic market. So going ahead over the course of the next couple of years, once our expanded capacity is fully online, we expect to be 60/40, that is 60% exports and 40% domestic. So we will gradually sort of move into the space which is available in the domestic market without sort of compromising our long-term relationships as far as leading buyers overseas are concerned.
All right, Mr. Panda, on that note, thank you so much for joining us and weighing in on the numbers and the growth roadmap ahead. With that, it's time for a quick breather. Don't go anywhere. We'll be right back.